Welcome to Let's Talk Forex. So this is our last episode of the season, and as we do every year, we thought we'd end it with something a little bit more fun. So this year, we thought we'd take a look at the bigger news stories about Forex trading fraud over the last year.
Hey, Alison.
Hey, Chris. How are you doing?
I'm very well. And soon to be Merry Christmas. An early Merry Christmas to you.
Yes, thank you. And likewise.
Yeah, thanks. And to all the listeners and viewers too.
Absolutely. Yeah, Merry Christmas to everybody. What are you up to for the Christmas season?
I am flying up to London in a couple of days, and I'm going to be spending it with my girlfriend's family. And then I'll be flying down to southern Spain to spend the new year in southern Spain, which should be fun too.
Oh, wonderful.
What are you up to? Sweltering in the heat, I imagine.
Yes. Yes, we're going to be in Kent for a bit. My brothers are coming to visit from one from Jakarta and the other from Johannesburg, actually, with their families. And then we're actually going up to Joburg for a bit for New Year, which will be nice. Also very, very hot in Joburg. I think they've got temperatures at the moment of 36 degrees plus.
Wow, that's too much. 36 is too much.
Can't complain about it here. I mean, the sea has been absolutely beautiful. The temperature is just perfect. So I don't mind it if we get it here. Yeah.
No, it's true. If you've got the ocean nearby, it's a lot easier. For me, I've always had Christmas in cold countries, so it feels weird. I mean, over the years, I have had a few times where I've been in South Africa or other places for Christmas where it's very warm, and it always feels a bit weird, like it's not really Christmas.
Yeah, it must be. Yeah, I guess the idea of Christmas is always the snow and the Christmas trees, eh?
Exactly. Christmas trees and snow and snowmen and jingle bells and all that kind of stuff. Yes, I mean, we don't really get that in Portugal either, but I mean, it has gotten very cold the last few days. It was down to 4 degrees last night. So beginning to feel a bit more Christmassy here than it has the last couple of weeks.
Because you were telling Aaron, you were boasting and telling Aaron that you had 18 degrees last week, I think.
That's true. Yeah. In our last podcast. Yes. No, he was very jealous. No, I do like telling people the weather in Portugal when they're in a cold country. It always makes them very jealous. I know. But now the tables have turned and now it's cold here. But anyway, should we get into it? It's a festive podcast.
So as I mentioned earlier, we're going to be talking about the top Forex fraud stories of 2024.
Yeah, not just Forex. I mean, a bit trading fraud, but a few other things in there as well. And it's an interesting mix. There's some big stories which we've covered before, involving billions of dollars in losses that shook the markets. There's a smaller one that's more recent that many of our listeners may have heard about, involving meme coins and an infamous influencer. And then we've got a fraudulent broker getting their comeuppance, which is always nice to see. It doesn't happen too often. And then another one about an institutional trader who was caught trying to cover his losses. So yeah, an interesting bunch.
Yeah, and it just, goes to show, something we speak about very often, that where there's money to be made in trading, there'll always be scammers sort of waiting to prey on people who are looking to make that money. Yeah, so first up, we want to look at a now defunct Forex broker, RoFX or RoFX. And they basically ran an online brokerage between 2018 and 2021, so for about 3 years. And the 9 defendants in this case controlled 5 companies. And these all used the site to fraudulently solicit and misappropriate at least $57.5 million from US and international customers, for purported trading in Forex.
Yeah, no, this is one that I think we see a lot of these kind of sites all the time, and we've talked about them a lot. And you see warnings against them, but yeah, this time they actually got caught.
Yes, which is good.
Yeah,
and it's something we've spoken a lot about on this podcast. If you've followed us, over the years, you'll see that we often talk about being wary of brokers that guarantee profits. That's always the biggest red flag.
It is exactly. In this case, RFX, they claim to have a highly successful automated trading robot. So the kind of thing you'd get on MetaTrader or CTrader anywhere, algo trading. And and as you said, Alison, the big warning sign here was guaranteed profits, guaranteed coverage of losses in this case. Anytime you see that, you should know to run the other way as fast as possible. So and the judgment found that they misappropriated all of the customers' funds, all 57 million of it, and they wired the funds to offshore entities, with no connection to Forex trading at all, and to these individual defendants' personal bank accounts.
And the judgment order against ROFX, issued in April this year, found the 9 defendants liable for all violations of the Commodity Exchange Act and CFTC regulations alleged in the amended complaint. So under the terms of the judgment, the 9 defendants were required to pay over $56 million in restitution to defrauded customers, which was probably a good outcome, and $170 million in fines. And the judgment also permanently banned them from registering with the CFTC and from trading in any CFTC regulated markets. It always seemed crazy to me. I mean, it seems obvious that you're going to get caught out at some point.
Yeah, absolutely. I think the main mistake that these guys made is they were based in the US. And, the US, the CFTC does not mess around when it comes to this kind of stuff. I think if, as you said, we see a lot of these fraudulent brokers, but they're generally based in offshore locations where they're quite difficult to track. But in this case, and as a result, we see a lot of these fraudulent brokers get away with it. But in this case, if you're running this operation out of, I think they were out of Florida, you're running this out of Florida, you're going to get busted. And they did. It's good to see.
It is.
170 million. I don't think they're going to be able to pay that back anytime soon, but we'll see.
At least it's more than a rap on the knuckles, though. They're not going to be doing that anytime soon, and hopefully it'll put other people off doing it as well.
Yeah, exactly. No, that's the hope. Next up is a cautionary tale from the institutional trading world. In November, Macquarie Bank, it's the world's largest metals trader. They're an Australian bank. They were fined £13 million, $16 million, for serious control failures that allowed a junior trader in their London office to conceal hundreds of fictitious trades over a 20-month period. And this resulted in losses of about $60 million for the bank themselves.
Yeah, and if, 2 enforcement notices published by the FCA say that Travis Klein, this trader, was asked by supervisors in June 2020 to de-risk his trading book. And at that point, he started recording fictitious trades in Macquarie's internal systems in order to conceal loss-making positions.
Yeah. And this is a tale we've heard before, and it happens every few years in institutional traders. These young kids, I think he was in his early 20s. He wasn't too long out of university, and he obviously got too caught up. And he actually said to the FCA that he felt he could not disappoint the commodity markets and finance supervisors. He felt a lot of pressure to make the profits that the bank needed or the bank expected. And so the effect of these fictitious trades gave the appearance that his loss-making positions had been lowered or been removed. The most common technique that he used, and this is a failure of Macquarie's internal control systems, which the FCA have highlighted here, was enter fictitious trades with a clearing date set a day or two more in the future. And then he would continually roll that date forward. So it was never actually picked up by their risk management systems. And so hence why the FCA were fined, and they fined Macquarie for this as well as going after the trader.
So, in 2022, in February 2022, they became aware of his actions following an internal risk controls report. And then, his positions were eventually unwound over the next 2 days, and it resulted in losses of almost $60 million for the bank.
Yep.
So, yeah. It's
pretty brutal. It's pretty brutal for everybody concerned. Also in the enforcement notice, the FCA noted that Klein himself would have faced a personal fine of £72,000, but this was waived due to evidence of serious financial hardship. Basically, he became personally bankrupt as a result of this. So yeah, a cautionary tale here, and quite a sad story. But we see this kind of stuff popping up in institutional trading every few years.
And then next up, this scandal is actually just a few days old, and it's already been all over social media. So, after a rough few years, we saw the huge decline of Bitcoin from about 2021, but it's exploded in 2024, particularly over the last a few weeks, and most noticeably because of Trump's election victory and who he's appointed to the SEC, Paul Atkins. The crypto industry has long been a happy hunting ground for scammers. So, with NFTs and so-called meme coins, and they're a particular favorite of scammers.
Yeah, they have been historically a particular favorite. And there's any number of tales of fraud from the crypto world. This one seems to have caught the world's attention in particular. And it involves an infamous influencer and internet celebrity called Hayley Welch, known colloquially as Hawk Tour, after a video featuring her discussing a sexual act went viral earlier this year and earlier in 2024. And like many minor celebrities, she tried to capitalize on her fame by launching a coin, a crypto coin, called Hawk, capitalizing on her viral name.
It just seems insane.
It is insane.
That people would think that was a good idea.
Yeah. Yeah. Meme coins can get weird.
I always laugh when I go through them and I see there's actually market activity with these coins. I'm like, you cannot be serious. Really? Anyway, unfortunately, she seems to have at very least taken some really bad advice. And the launch of her coin went, very wrong and possibly with criminal repercussions. So the Hawk meme coin was launched at 10 p.m. on December 4th, and it rose to a peak market cap of $490 million. And the price of the token then plummeted and was trading at a valuation of $41.7 million at the time of the publication. So basically marked a 91% downturn in less than 3 hours. So a lot of people lost their shirts with that one, I think.
Yeah, according to data from the Solana Block Explorer Soul Scam, one wallet, particularly, they managed to buy up a huge amount of Hawk seconds after launch, purchasing 17.5% of the supply for, they used a cryptocurrency called Wrapped Solana, and that was worth $993,000 at the time. Over the next 1.5 hours, that wallet sold 135.8 million Hawk tokens and made a profit of $1.3 million as a result. Hence, we saw this decline. And, this is called sniping. And it's quite common with poorly launched meme coins, poorly launched coins in general. You get these big wallets that will just step in and buy up a huge amount and force the price up. Retail traders get involved, and then they sell it off as quick as they can. And in this case, a lot of retail traders have lost a lot of money, and they're not happy about it.
Several users on X have basically claimed to have filed complaints with the SEC, and there have been law firms that have been advertising their services to those who lost money on the Hawk token. And Hayley herself has actually taken to social media, and she denies that she or her team have sold any of their holdings. And, as you said, she's basically blaming the so-called sniper wallets that buy these huge amounts of crypto at the launch. And sort of shirking responsibility, I guess.
Exactly. But either way, she is responsible in the SEC's eyes for this and for the losses that traders have made. And especially because the SEC takes such a dim view of influencers getting involved in crypto trading at the moment. And so I think she'll probably, I imagine, unfortunately for her, she's probably going to end up with jail time. And it does look like she's just had bad advice and a bad team around her for the launch of this coin. But either way, the SEC don't take ignorance as a response, I'm afraid, when it comes to this kind of thing. So definitely an SEC investigation, I'm sure, and then possible jail time in the new year.
But again, I guess, what do you do? As the SEC, they also have a responsibility to traders.
Absolutely. The SEC, absolutely, their responsibility is to these retail traders who lost all their money. And there are ways of protecting your account, protecting your launch from snipers and this kind of behavior. But they obviously didn't follow through with them.
Yeah. Anyway, and finally for today, there was the conclusion of the Archegos scandal. So we actually mentioned the scandal and its owner, Bill Hwang, on a previous podcast. I think it was sort of our final podcast of last year.
Yeah, no, we did. We've talked about him before, and it's infamous case, actually. So Bill Hwang was a very well-known, very well-respected name in the trading world and investment world in New York. He had Archegos Capital, which he had founded himself. And through the use of a derivative called total return swaps, he took up highly leveraged positions across multiple companies, with a whole host of large investment banks. You just name a big investment bank, and he had taken up these. He was using these derivatives with these banks. But the thing about total return swaps is you can circumvent disclosure requirements, so you can keep the scale of your market exposure quiet. And even from the other banks in this network, none of these banks were aware of how many of either the leverage that he was using or how much else he held in these other companies. And he kept it hidden from the public. He kept it hidden from the banks. He kept it hidden from the regulators. But unfortunately, it all went very badly for him.
Yeah, because in March 2021, the losses at Archegos triggered the default and liquidation of his positions, and it approached $30 billion in value, which led to substantial losses for Nomura, Credit Suisse, Goldman Sachs, and Morgan Stanley. And, before the Archegos collapse, Huang was believed to be worth around $10 to $15 billion, with his investments leveraged at 5-1. So you can just do the math on that.
Yeah, no, it's a lot of money. And then the court case rumbled on, but then eventually in July of this year, the jury in a federal court in Manhattan found him guilty on 10 of the 11 counts of fraud, securities fraud, wire fraud, conspiracy, racketeering, and market manipulation. And he was sentenced just a few weeks ago now, on November the 20th, 2024. I think this is a particular case of the government making the courts making an example of someone.
Mm-hmm.
Now, the government had been asking for 21 years, which a lot of observers thought was way over the top. And Huang's own lawyers had asked the judge for leniency and to avoid jail time completely, which I didn't think would be very likely either.
Judge called the lawyers ridiculous, and he said there was no ways that he wasn't going to take responsibility and do the jail time. The amount of losses that were caused by his conduct were larger than any of the losses I think the judge had ever dealt with. So he sentenced Huang to 18 years in prison. I guess this was a big lesson to him and hopefully others again.
Yeah, exactly. Like I said, I think he's being used as an example here by the court system. And he'll probably, with the court system in the United States, he'll probably only end up serving 6 or 7 of that, but that's still a very long time to be behind bars for a white-collar crime. And it just goes to show the scale of the losses that are involved here. I think that at the end of the day, it was approaching 35 billion. And you can't really walk away from that. You can't really walk away from that. So that's the roundup, Alison. It's a mix of Forex fraud in 2024. There's a lot more stories out there in 2024, but I think those covered a wide range of the various kind of financial scandals that you see in the trading world. Yeah.
And I think just as we close here, if you are seeing anybody, promising a guaranteed profits on any system, please just stay far, far away from those systems. We always talk about Forex trading or any type of trading being very risky, and particularly if somebody's doing it on your behalf. So just be very aware, do your due diligence, chat to us, send us an email. If you don't know, we'll be happy to look into it for you as well.
Exactly. That's fantastic advice. And so stay safe and have a very Merry Christmas. And we're back. When are we back, Alison, in the new year?
I think the second week of Jan.
Second week of January. We'll be back in the second week of January for 2025. So wishing you all, again, a happy Christmas and a lovely start to your new year. And we'll speak to you then.
Cool. Cheers, Chris.
Cheers, Alison.